Trading in crude oil can be very profitable if you are trading with a right strategy and a right pattern. And after going through a lot of patterns, we have found out that the triangle pattern works very well in crude oil. And in this video, we're going to explain how this chart pattern works, what are its types, and what is the trading psychology behind the triangle pattern, and also what things you need to keep in mind while you're trading with the triangle pattern. So without any further ado, let's get started. So in this video, we're gonna discuss about the triangle pattern, and this pattern works very well on the crude oil charts. So in this pattern, first let's go ahead and discuss what is triangle pattern. And as the name suggests, the triangle pattern forms when the market is making a structure in which every next swing is smaller than the previous swing. So by making that structure, market will be kind of moving toward a single area. And here we can see that this is the first swing, this is the second swing, and this is the third swing. So every next swing is smaller than the previous swing, and that's why we can draw these trend lines, this upper trend line and this lower trend line. So this is how the triangle pattern looks like on the chart. And if we go ahead and discuss about its types, then there are two types of the triangle pattern, and those types are determined by in which direction the breakout happens. If the breakout happens in the bullish direction, then that will be a bullish triangle trading pattern, and if the breakout happens in the bearish direction, then the trading pattern will be bearish triangle pattern. Okay, so one thing that you should consider or you should keep in mind is you should understand how this triangle pattern works. So as you can see here, the price is consolidating towards inward. Okay, as you can see here, every next candle or every next swing is smaller than the previous swing. So this consolidation of the price towards this area or this point represents that the indices in the market, okay, because the buyers and sellers are not able to take control of the market. So whenever the breakout happens, that would mean that after this indecision phase in the market, either buyers or sellers have taken control. If the breakout happens in the bullish direction, then that means that after this long indecision phase, the market has decided to move in the bullish direction and buyers are in control. Conversely, if the breakout happens in the bearish direction, then that would mean that the sellers have taken control and they are driving the market in the bearish direction. So this is the trading psychology, that this triangle pattern represents the indecision, and the direction of the trend after this indecision phase is determined by in which direction the breakout happens. So if we go ahead and talk about the trading strategy points that you should keep in mind while trading with a triangle pattern is, for bullish pattern, the prior trend must be bullish. So one thing is that the triangle pattern is both a trend continuation and a trend reversal pattern, but we have found out through our backtesting that it works best when we use it as a trend continuation pattern. So this first point corresponds to that for bullish pattern, for bullish triangle pattern, the prior trend must be bullish. So in this case, the triangle pattern will act as a trend continuation pattern, as we will see in our examples. And the second point is there must be three waves in the pattern. As you can see here, that this is the first wave, this is the second wave, and this is the third wave. If there are only two waves, then we would not consider that pattern, because that would not completely show us that the market is in indecision. So we should keep in mind and look for the pattern in which there are three swings or three waves in the market, and every next swing is smaller than the previous swing. Breakout must be in the direction of prior trend. So this again corresponds to the first point, that if the market is moving in the bullish direction and then there is the formation of the triangle pattern, the breakout should also happen in the bullish direction. Then we will consider taking trade. And for the bearish triangle pattern, the rules are same but opposite. So for bearish, the prior trend must be bearish, okay? And the second point is same, that there should be at least 3 waves in the pattern to be considered, and the breakout must be in the direction of prior trend, which is that if the market is going in the bearish direction, then there is the formation of this triangle pattern, then the breakout should also happen in the bearish direction, then we would take our trade. So basically what this means is that the triangle pattern in our strategy will only be considered, or we will only trade it when it is acting as a trend continuation pattern. So now let's go ahead towards the examples and see how this strategy works. So here on the charts we can see there is the formation of this triangle pattern in which there is this first swing, then there is the second swing, and there is the third swing. Now you might be wondering that these are not exactly the swings that we discussed in our theory, and the fact about that is you will never be able to find the charts that would suit perfectly to what you study in theory, because in practical we do have to make some considerations. So here you can see that this is the first swing, then this wave, it will be the second swing and third swing, and also the market is making these swings in a manner that every next swing is smaller than the previous swing. So this is a valid triangle pattern. And our second point was that if the market is moving in the bullish direction, the breakout should also happen in the bullish direction. Let me just remove that. And as you can see here, when this triangle pattern was forming, the breakout happened here with this bullish candle. So now as soon as the breakout happens, we will take our trade, and our entry will put a market order, and our stop loss would be the low of this last swing. As you can see here, this is the low, so I'll just go ahead and take a long position here at this level, and our stop loss will be at this level where this last low is. In order to decide our take profit level, we would consider this first wave, and we would measure the distance between these two levels, this high and this low of our first swing. So let me just go ahead and take this line, and if I go ahead and draw it from this level to this level, so this will be our take profit level. So let me just go ahead and extend this. So our take profit will be the difference between high and low of our first swing. So this is the strategy for the triangle pattern in crude oil. Okay, so the prior trend was also bullish, and the breakout happened in the bullish direction. We took this trade, and this is our take profit. And if we go ahead and look here, so here similar thing is happening here, that the prior trend is bearish. There is the formation of this bearish triangle pattern, and every next wave is smaller than the previous wave, and this breakout happens in the bearish direction. So we would take this trade, and our entry would be at the same point where the breakout happens. So we'll put the market order, and the stop loss would be the low of the high of this previous swing. Okay, so this is the high, and here our take profit will be the same difference between these two levels. So if I go ahead and draw this difference, okay, so this line will determine the take profit level, which is here. Okay, so again you can see that this triangle pattern worked very well because we are using it as a trend continuation pattern. Now let me just go ahead and look at another example. As you can see here as well, if we go on a lower time frame, you'll be able to see that there is a formation of this triangle pattern, and there are 3 waves inside it. And similar strategy is that we would use this last swing for stop loss, and as soon as the market breaks out, we'll use that to take the trade, and the difference between these two levels will be let me just go here. So the difference between these two levels will be our take profit level. And if I just go ahead and draw this, so this will act as our take profit level. As you can see here, the market moved in as we anticipated. So let me just move forward and look for other example. So as you can see here, I have took 3 trades, and all 3 trades are in the in our desired direction, or where we expected them to be. This is another triangle pattern forming here. This is the first swing, second and third swing, and then on the fourth swing the market is breaking out. So we will take the entry as soon as the market breaks out from this zone or this trend line of the triangle pattern, and the stop loss would be at the low of this previous swing, and the take profit will again be the difference between these 2 levels, this for the first swing. So if I just go ahead and take these levels and draw this difference, then this will act as the take profit level. So let me just adjust this, and as you can see here, this again moved as we expected. And if I go here and show you that there is another formation of this swing, and similarly this also hit our expected take profit level. Now here as well you can see that there is again a formation of this triangle pattern, but we will not take this trade. If you remember, we discussed that if the breakout is happening in the bullish direction, then the prior trend to the formation of triangle pattern should also be bullish. But in this case it is opposite. The prior trend is bearish, and then this triangle pattern forms and the breakout happens in the bullish direction. So we will not take this trade. Even if it moved in the bullish direction, we will not take this trade. Here it is acting as a reversal pattern. So we only want to take trades when the triangle pattern acts as a trend continuation pattern. So I hope you guys like this video. If you have any questions, please comment down below and I would love to answer them. Also, don't forget to like, share and subscribe. See you guys in the next video. Thank you.